Welcome to the webinar, Business Updates in Response to the COVID-19 Crisis. This is Jeff Herman from the Business Journal, and I am joined by a panel of experts that can share the fast-changing information and the updates to businesses here in our region of the Mahoning, Shenango Valleys and Columbiana County, and broader Northeast Ohio and Western Pennsylvania. Business updates in response to the COVID-19 panel. So the housekeeping today, this will be an active, interactive discussion of which we're also streaming this live on Facebook. There will be a chat box that will be monitored, a Q&A feed that will be monitored. And we encourage you, please, if you're seeing this live on Facebook, to drop in your comments on where you're watching it from, assuming you're working from your home office, like many of us are on this feed today, and ask your questions there as well. So this will be a very brisk and active discussion. We've got a lot of great questions thus far. So at this point, I will hand it over to our panelists to briefly introduce themselves, and I will start with Marcy. Please introduce yourself.
Hey everyone, I'm Marcy Angelo. I'm the Director of Client Relations at Glove Payroll.
Thank you. Nice. Hi, Marcy. Angela, please.
Yep. Hi guys, I'm Angela Johnson. I work for Davis CPS as a communications coordinator, and I help with our accounting and marketing as well. And I also help out with some of the marketing for Glove Payroll.
Okay. And Mr. Tim Petrie.
Hi everybody, Tim Petrie. I'm a managing member at Davis CPS. Doing our best to stay on top of this stuff and get the information out.
Great. Thanks for joining us today. And lastly, please go ahead. Terry.
Good morning, everyone. I'm Terry Lauk. I'm from Mahoning Valley Economic Development Corporation. We specialize in small business lending.
Excellent. Well, thank you all for joining us today in this fast-changing time. We're all dealing with the pandemic of COVID-19. Lots of changes. Even today, the stimulus package was supposed to be passed as of this morning. So at this point, I will hand the presentation over to Angela, who can run us through the PowerPoint. And as we said, we are monitoring the channels, the Q&A and the chat and Facebook Live. So please feel free to drop your questions in there, and we will respond accordingly. There are natural breaks in the presentation in which we will be taking these responses. So please go ahead.
All right, thanks, Jeff. So obviously there is a lot to cover here. Things are happening fast, and there's a lot of information being thrown our way. So I'm sure we're all going to have a lot of questions, as things kind of unravel here. Tim, Marcy, anyone feel free to chime in. Like Jeff said, as we go along, we are going to be having some stopping points where we will take your questions and do our best to answer them. Like I said, we're kind of trying to just summarize here basically what's already out there, what's available in concrete. There is some information that's pending, of course, and some information is in a gray area, but with this presentation, we're just showing you what is out there, summarizing it for you, and we'll take your questions as we go along. So before we do jump into the topics, I just wanted to throw out there that, just be patient with this process. Like Tim and even Jeff in yesterday's webinar mentioned, it's important to use this time wisely, and to do your homework and just kind of, not consume yourself with everything that is going on. But of course, stay up to date and be informed. Obviously it's important to be informed. So we're all in this together, and we're going to get through this together. So with that being said, our topics today are the Families First Coronavirus Response Act. I'm going to be talking about that and the bill and some of the provisions within that. We've got the new SBA loan that is out, and some other things that Terry will be talking about in that regard. Ohio and Pennsylvania and shared work. We've got unemployment insurance that we will be discussing, and at the end we'll kind of wrap up with some other tax credits and new deadlines that are implemented now. So first is the Families First Coronavirus Response Act. There are two main parts to this, and those are the Emergency Family and Medical Leave Expansion Act and the Emergency Paid Sick Leave Act. These will be effective 15 days after the enactment. So this was enacted on March 18th. It will take effect April 2nd, and it's in effect until December 31st of 2020. And it's important as I'm going through this that we understand that there are exemptions to this. Healthcare providers, emergency responders, those people are obviously very much needed right now. So there are exemptions for them. Also for businesses with under 50 employees, if such requirements would jeopardize that business and pose a going concern for them. So it's just very important to keep in mind that there are exemptions for these available. So first we're going to jump into the EFMLEA, and that's the expansion of the Family Medical Leave Act. And it literally is exactly what it says, and it's an expansion. The FMLA is still in place. It's not going anywhere. It's just adding on to it, specifically for the coronavirus. You can take EFMLEA or FMLEA dependent upon how the business and employee fall within the requirements, which I will compare and show you later. We have a separate slide for that. The process is very similar to file and qualify. You would have to submit your request, have that information readily available as you're doing so. You'll want to consult with an HR professional on this just to make sure. But basically, this is for generally private sector employees with less than 500 workers, and it provides employees up to a total of 12 weeks of family medical leave. So this isn't in addition to the 12 weeks of FMLA, it is the total 12 weeks. It's for those who have been employed with the business at least 30 calendar days, and for those who can't work or work from home to care for a minor child if that child's school has been closed or the child's care provider isn't available due to coronavirus. So it is for a child, the minor child under 18 years old. The first 10 days of this family leave can be unpaid, but after that, the employees will receive 2/3 of their normal rate of pay. So for the first 10 days, an employee can elect to use any sick personal time off as paid leave there, but then after that, it will be paid regardless at that 2/3 rate. An employer can't force them to use those days though. So that's something to remember amongst all of this. Part-time workers and workers who have varying schedules can qualify, but again, that's kind of where we get into that area that we might have to do some more digging as information becomes available and more concrete. So this is just a comparison of what was and what now is. So under the FMLA, it was 50 or more employees. Under the new act, it's under 500, although exceptions do apply. Under the FMLA, you had to have been employed for 12 months and worked 1,250 hours in that prior year. But under the new one, you have to be employed for at least 30 calendar days. Again, the same thing, it's 12 weeks protected leave. That has not changed. But under the old, it's, of course, that doesn't cover anything in particular in regards to the coronavirus. It was for the employee's self, child, spouse, or parent with a, quote, serious health condition. Now with the new family leave, it's for an employee's child that's affected in some way, whether that's the care provider isn't available or their school was closed, and that employee is now unavailable to work. And then under the old, under the FMLA, it's unpaid. With the new, the first 10 days can be unpaid, but then the rest will be paid at that 2/3 rate. Okay, so there is a credit available for this. It's 100% credit for businesses, and it's against the employer's share of the payroll tax for each employee. And it's important, this is on a per employee basis. So the credit is increased by specified health expenses, and then the employer must still pay the 1.45% employer Medicare, but these wages that will be paid are not subject for the Social Security tax. So Social Security tax is not included in on this. Per employee, the business credit is capped though. So it's capped at $200 per day and $10,000 in total per employee for this specific part of the new act. An employer can, of course, pay more than the $10,000, but the credit only goes up to that. So this is an example that we came up with just to kind of show you. Take a salaried employee at $50,000 and say they must leave to care for their child for 12 weeks. You take the $50,000 divided by 260 working days, and that's $192 per day. And then you're going to take that and multiply it by the 50 days. So that would be your taking into consideration those 10 days, and you'll have a total tax credit of $9,600 for the business. Again, the wages are not subject to the Social Security tax. Before I move on, anybody have any comments or anything to add?
I think it's important for people to realize where that money will actually show up in terms of the tax credits. So these tax credits will all happen on your 941 tax filings. So you won't necessarily have to wait until the end of the year to file your income tax return. There is some relatively immediate relief because there'll be credits available on your 941s for your deposits for payroll taxes. So it gives you a little bit quicker of relief in the scenario where you have to use it.
Okay, so now we're going to move on to the sick leave that was put in place. So
Real
again,
quick, Angie, someone asked a question. So Kelly Warren asked, does the employee need to take the time all in a row, or can they take a few days each week?
It's actually a really good question, but I unfortunately don't have the answer right now. Tim,
the way I understood it is that they have the 12 weeks to use how they choose before the end of the year. So it's something that we can further look into to clarify, specifically for Kelly that asked the question, or for anyone else that may also have that, if maybe they only want to take a few days a week for childcare, switch on and off with their spouse, whatever it might be. So Kelly, we will look into that and get back to you with a 100% answer.
Yep. Thank you for the question. Okay. So if you guys are good, then we'll move on to the sick part. This again is for generally private sector employers with less than 500 workers. And this is different, of course, because it's the sick part, it's the sick leave. So it's providing employees who are unable to work or work from home with paid sick time. Now, I just want you guys to to remember these 6 points here, because I'm going to refer to them in the upcoming slides here. The first 3 have to do with the employee's self, and then the last 3 have to do with another individual other than the employee. So the first one, an employee is subject to a coronavirus quarantine or isolation order. An employee has been advised by a doctor to self-quarantine, and an employee who is experiencing symptoms of the coronavirus and is seeking the medical help on that. Those are the first 3 for the employee. The last ones are, again, for someone else. So it would be an employee caring for an individual in 1 or 2 above, an employee caring for a child whose school or place of care is closed, child care provider isn't available, things like that. And then the last one is an employee who is experiencing any other substantially similar condition as specified by the Department of Health and Human Services. So let's get into a little bit more details on that. So this is available for immediate use regardless of an employee's tenure with the employer. So that is different than the FMLA or the EFMLEA. It's for full-time employees affected, and they will receive 80 hours of paid sick leave, and part-time employees will receive leave equal to their average hours worked in those 2 weeks. And again, there are exemptions with this as far as that goes, but employees on sick leave to care for themselves will be paid the greater of their normal wage or the federal, state, or local minimum wage. Employees who take care of someone else, as described in the prior slide, will be compensated 2/3 the foregoing rate. You will want to check with your state as to what constitutes like a covered person, because I believe there is still some gray area with that. One state might, for example, say that a grandparent is qualified, or they might say it has to be your spouse. This was something that still seems to be a little gray for me. But basically, just be aware of this. If it's something that we have to look into more specifically for you, of course, we'll have your questions. Jeff, I know, has the means to collect those and get those to us. So we'll do our due diligence and look into it if needed. But again, just something to be aware that it might vary as your states and jurisdictions are. So there is a business credit for this as well. It's 100% credit available against the employer's share of payroll tax for each employee. And it's the same thing. It's subject to the Medicare portion, but not the Social Security tax. But the main difference here is it depends on that scenario, as if you will, as I mentioned in the prior slide. It's per employee. The business credit is capped at $511 per day and $5,110 in total for employees who fall within those first 3 categories. So that would be the employee's self. If it's for someone else that the employee is needing to take care of, then the business credit is capped at $200 per day and $2,000 in total for employees who fall within those other scenarios. And so the credit for the business is higher if it's for taking care of the employee themselves. And again, going back to that same person from our first example, same salary, $50,000, has to leave to care for a child for 2 weeks. You take their salary and divide it by the working days, and then you get that $192 per day. And then you take the $192 per day times 10 days, and that's the tax credit of $1,920. So yeah, again, the Social Security is not included within this portion. Tim, did you have anything else you wanted to add, or Marcy?
I have a couple of questions that have come in. I'd be happy to address.
Okay. Let me get through this next couple slides here, just to show you all the comparison that I kind of made to show. So this now is taking the sick leave against the family leave. Just, it's a lot of information, so we're just trying to do our best to make it as simple as possible, I guess. So they're both for basically the same employers with less than 500 workers. Although the sick leave is for the employee or the employee's family member or person they're taking care of, the family leave is for the employee's minor that's affected. Obviously, it's for the employee, but it's because of the employee's minor that's affected. The duration is different. You can see that there. The pay rate for the family leave is going to be 2/3 of the normal rate, whereas for the sick leave, it just depends on that scenario that we were talking about. And then again, there is that 100% credit that's available. It's going to depend for the sick leave as to what applies, whereas the family leave, it's that $200 per day and $10,000 in total per employee. Sorry about that. Okay. So these are just some resources we wanted to throw out there. You'll want to keep up to date with, and of course, we're here. We're going to answer your questions here in a minute. So I don't know, Jeff, if you want to take care of those, or.
I've got a couple that have come in here. Jody asked, what does this mean for self-employed folks with 1099s? Unfortunately, what everybody has to remember about this specific bill is this is in regards to employers between 50 and 500 employees, and more specifically for employees that are out sick or out as a result of school shutdown, so the kids have to be at home and they don't have anywhere to take the kids. This is not any kind of, at this stage, this is not a relief bill that is addressing anyone that is not able to work because of a shutdown or not able to work because they're non-essential business. We are seeing some of that relief coming in under some of the new bills. There's a Senate bill that supposedly is going to be through over the course of the next couple of days. But this bill specifically, everybody needs to remember that this is in regards to those that are out sick and or forced to not be able to come to work because of implications with daycare and or not being able to go to work because of family health issues. So that was one question. Another question was in regards to businesses that don't have the money to continue to pay their employees, which unfortunately is a conversation that we've had with plenty of folks. Right now, everyone is facing insanely difficult decisions about retaining employment and doing what's best for their employees and their companies. I think that the answer in regards to that question is this bill does not specifically address that circumstance. This bill, again, does not address the circumstance where your revenue has stopped. These are not substantial enough tax credits that are going to make up for any of that. The tax credits at this point are going to assist those that have the ability to pay their employees while they're out, and or that have been directly or very nearly indirectly impacted by the virus's health effects. Again, we hope to see some more legislation coming that will address some of those other small business funding and or short-term payroll loans or things like that.
And we have another question. Question is, if your spouse is an employee but has to stay home to care for our children, can we deduct their income up to the threshold?
Okay, so in our world, one of the most important conversations that we have with people on an ongoing basis is the difference between deductions, tax deductions, and tax credits. So in the scenario where we're talking about tax credits for employees that are forced to leave due to these other implications, I would venture to guess, not knowing all the other circumstances, but if your spouse was an employee that was on the payroll and has been treated as an employee for every other circumstance and every other definition, if they were not able to come to work and you had to put them on leave as a result of this, then I would think that they would be eligible. Typically what happens is we'll get clarification down the road in regards to family members or non-arm's length related transactions where we're dealing with kids or spouses or things like that. Right now, as far as the bill reads, that is not specifically addressed, but I wouldn't be shocked once it gets into the actual code itself that will be addressed. And if it's not specifically addressed in the code, then it'll be addressed in court cases and tax regs and decisions over the coming months. For now, I would base it under the assumption that if the person is treated for all other purposes as an employee and you've done everything else correctly, you've been paying them as an employee, you've been reporting their wages, you've been paying all the payroll taxes, then one would think that they would be eligible for the credit.
Okay. So we can, I guess we'll of course address any other questions. I know we've got quite a few coming in, but if we want to keep things moving along, I would have to then hand it over to Terry.
Thank you. Marcy and I are going to go over the Economic Disaster Loan Program through the SBA together. Created in 1953, the Small Business Administration, or SBA, is a cabinet-level federal agency fully dedicated to helping small business. SBA provides business counseling, funding, and contracting expertise through various agencies like certified development companies, small business development centers, procurement and technical assistance centers, SCORE, and women business centers. As part of a national response to COVID-19, they are now offering economic injury disaster loans for working capital needs to small businesses. But before Marcy goes into that, I'd like to cover some of the things they're offering for their existing programs. So for instance, if you have a 504 or an SBA 7A loan, there are some deferment options that you have. With the 504, we can help you work through a deferment for up to 6 months that will alleviate your payments in the short term. The SBA 7A loans offer deferments between 3 and 6 months, depending on some internal variables. And your bank can work with you through that. Last but not least, the other thing I would recommend is reaching out to your bank, the traditional lender, and seeing if you have a cash flow need that's immediate, seeing if there's something that they can work with you on. I know every bank that I've talked to, whether it's been local or national or regional, has some type of program in place that they're looking at and reviewing their clients' relationships on a case-by-case basis. So that's a very good place to start while you're working through the disaster loan application process. I'm going to go ahead and turn this over to Marcy right now to continue.
Yep, so thanks, Terry, for that information. I think some people are very well aware of what the SBA provides, and some people have never had to deal with them, so they don't really know. But SBA has been a huge talk in all of this when you're watching the news, whether it's local, state, or something on a more national level. But the biggest thing that I think a lot of people have heard of is that the SBA provides disaster relief, but we usually think about that from a hurricane or tornado or something in a very much smaller area, and is a lot of times ends up being physical damage. So because of the crisis going on with the coronavirus, the SBA has opened up this economic injury disaster loan program to any business that has been affected by COVID-19. So it's low interest. It's 3.75% for small businesses, 2.75% for nonprofits. I think it is very important to say that each application will be taken on a case-by-case basis. It can be used to pay fixed debts, help with payroll, accounts payable, maybe other bills that you have that you can't pay because of the coronavirus. You know, especially in the last few days, there were a lot of companies that were able to stay open, and now they can't because a lot of these stay-at-home orders, especially in the state of Ohio. So we were lucky that in the state of Ohio, Governor DeWine has been very much a leader in COVID-19. So he went to bat to get SBA opened up to Ohio last week. Angie, you can go ahead to the next slide. So basically, every small business in any of the 88 counties in Ohio can apply for this. If any of you have already tried to apply, you know that the website is extremely bogged down right now. I've tried several times this morning and I couldn't even get as far as logging on. So As Angie mentioned in the very beginning with this entire process, it is so important to be patient, and you're hearing that from someone that is one of the most impatient people ever. So it's tough, but it's a learning experience for all of us, but it is something that some companies might want to pursue. So it's as simple as going to disasterloan.sba.gov. Like I said, I couldn't really get much further than that this morning, but there's certain times where they're saying there's less traffic late at night, early in the morning. You can go ahead to the next slide. So like I said, it's very important to be patient. It's also something that we really want to hammer home, that this is not as simple as 5 to 10 minutes of your time. It's not information that you have readily available. They will ask for all of your real estate, whether it's personal or rental. If you still owe on those properties, you'll have to give the amount you bought it for, what you owe, what bank you have the loan through. So any automobiles you have, anything like that, it's very intrusive, but any of you that have done this before are very well aware of how that works. I think the main thing to note on here is the third bullet point, this FEMA registration number. So traditionally, in an instance, like I said, of a hurricane or a tornado, you have to go to disasterassistance.gov and apply for this FEMA registration number. As far as I can tell, although it asks for it on the application, we haven't heard of anyone that actually had to provide this number. So my understanding is that this specific process is waived for COVID-19, but just something to keep in mind, when you do start the application, it will ask for it, but it's not a question that has an asterisk. So I don't think it's something that we now have to provide, although in the beginning it did come up. So like I said, the biggest thing is really being patient, trying to gather as much personal, financial, and business financial information prior to, whether that be tax returns for the last 3 years. As far as we can tell, they haven't actually asked for 2019, and we are making the assumption that's because we are still in tax season. But a client that we did assist with, it asked for 2016 through 2018 tax return information, like I said, all the personal financial information for the owners. So these are all things you want to probably try to gather before you start the application, and then we'd be happy to answer any more specific questions that come while you do the application. The good part is you can save it and return to it at any time. I suggest hitting the save button every step just in case you do get logged off. But otherwise, like I said, being patient and understanding that some of the questions are slightly intrusive but necessary to complete the process.
Marcy, just to tag along there, all direction we've received from the SBA says you do not need a FEMA registration number.
Good, okay, so that clarifies that. God forbid we would ever be in the instance of something more like a hurricane, you would, but in this COVID-19 instance, you don't need that. So that's good to know for future applications.
Sorry, technical difficulty.
Okay, and Marcy, we have a couple of other questions.
Okay.
This relates to several questions on employee size. Please clarify these acts do not affect an employer with 25 employees. Or another one, waiver process for groups of less than 50. So there's questions around how does this deal handle with employee groups less than 50?
So
Yeah,
I believe, sorry, go ahead, Tim.
Right now, the clarity on the logistics there isn't great. What everything says in any of the tax bills that have been provided to us and the IRS's website has been that between now and the first week of April, there will be more specifics released in regards to how to claim an exemption from this, and it'll be monitored by the Department of Labor. So this isn't even necessarily an IRS mandate as much as it's going to be a DOL mandate. So if any of you have dealt with the Department of Labor specifically in the past, it's unique to say the least. But any and all of these are going to be, in regards to that employee size and the requirement of those payments, is going to be a DOL issue as opposed to an IRS issue, which basically just means that as long as you can provide for the fact that you have less than 50 employees, in providing this type of pay for them would not be financially feasible for your business, it's very easy to prove to them. I would imagine that once things are finalized, there'll be a specific either Rev Proc or a specific piece of legislation or instruction that says that, you know, as long as you can prove that at the time you had less than 50 employees at a specific date, that you'll be exempted from the requirements to make these payments. So that has been something that has been told us throughout, and is kind of sprinkled in every piece of this legislation that we've seen thus far, is that 50-person exemption is relatively clear and will be held on to, and it would be unlikely from my standpoint that from a larger scale that they could even force that action on less than 50 employees. They're not going to force people to go out of business. They're not going to push people out of business by forcing them to do this. But if there is a circumstance where they can supplement and allow you to do that, then they will. But that's the only guidance that we can give you at this point. There's no specific form to file and or piece of documentation to hold on to. But stay tuned over the course of the next couple of weeks as we get more information from the DOL in regards to the paperwork and documentation that you'll need to have.
I'm showing a note here that the DOL was supposed to release details today. So we will keep our eyes on that.
Yep.
So I'd like to jump in and answer Terry's question about the state of Pennsylvania. To my understanding, almost all 50 states are listed, but you can go to that disasterloan.sba.gov website and check, but Pennsylvania should be on there. So this should also apply to your business in Pennsylvania. And if you have more specific questions, you can certainly reach out to us.
Yes, Pennsylvania has declared, I actually believe they were eligible before Ohio.
Okay, perfect.
How are we doing on Q&A, Jeff?
Basically, another question, how does this affect subcontractors, single business owners?
Okay, so for the most part, there is very little assistance for those in what's referred to as the gig economy. That's kind of the buzzword to pay attention to in a lot of the news right now, is how they're addressing the majority of the self-employed folks in America. At this point, there will be a credit available if you are self-employed and get sick and or under some type of required medical quarantine. There will be credits available to you to offset your SE tax on your individual 1040, which if you needed that cash flow injection sooner rather than later, that would mean that you could conceivably reduce your quarterly personal estimates that you'd be making for your 1040. But I would be paying close attention to all the self-employed folks. I'd be paying close attention to the most recent package being reviewed right now in Congress that is supposed to address more of the individual self-employed folks and quote unquote, in their eyes, the gig economy.
Okay, good question there. Another question. Basically, have you seen any of these loans go through already? Any clarity on how these loans will be guaranteed? And will they hit personal credit scores personally or on shareholders or against the business? How does it affect the credit scores?
So SBA has been working applications since the beginning of last week. By a week ago Tuesday, they had over 6,000 applications in process. I do not know of any in Ohio that are approved. I assume they do have some that are approved. They had told us on a webinar it was taking about 6 days with a complete application to get an approval and 30 days to begin funding. So with that time frame, there's definitely some approvals. SBA does pull personal credit. I don't know if it's going to be a soft hit or a hard hit, but they look at it through all their programs. What they're looking for is all guarantors of 20% or more, I believe, have to guarantee these loans.
And then if I can just add, I did see Indiana was declared before Ohio, and some businesses out in Indiana were approved within a couple days. Obviously now there's been a lot more, but you'll have an answer in no less than 20 days from what I'm reading. And if you're denied, you'll know within 48 hours. So at least you can know right away if you need to pursue other options if the SBA does not approve the application.
And per SBA, if you're denied, you have 6 months to reapply. They've seen that in the past with natural disasters, so keep that in mind as well.
Another question, what would be the benefit to a company to pay the employee that needs to take time off to care for a child due to canceled school versus just laying them off? Is the tax benefit worth it from a retention standpoint?
Well, I mean, what people need to take into consideration here is, if you lay off your workforce, there is no guarantee that workforce is going to be loyal to you when the time comes back to go back to work. So I think that's been a lot of the guidance that we've been giving a lot of our clients, is using caution in regards to mass layoffs versus trying to come up with other opportunities to take care of their employees through this. So the two options basically in that are, number one, lay the employee off, and then that employee can go collect unemployment, which right now won't impact your unemployment tax rates, which we'll talk about a little bit later. Versus if they needed to take that time off to take care of their kids because the kids can't go to school or don't have daycare available, then there is a tax credit available to them. So from my standpoint, if you gave me the choice, if all other things were the same, if you gave me the choice and said, there's going to be a tax credit that's going to be available to completely reimburse the cost of keeping this employee on payroll versus laying them off and allowing them to go collect unemployment, I would think if the dollars were the same, if the employee were to get a similar amount of money and the employer was reimbursed for the cost to take care of that employee, I would choose keeping them as an employee and paying them and receiving the tax credit, because then again, you're keeping them as part of your group. You're taking care of them through what is an insanely difficult and uncertain time. And the tax cost and the end dollar ramification is kind of null, assuming that all the numbers line up correctly. I would be more apt to leave somebody on my payroll and pay them sick pay if I were getting reimbursed 100% of that with a tax credit versus laying them off. Just from a beyond a financial standpoint, it's that standpoint of continuity. It's that standpoint of keeping your team together as best as possible. So the tax dollars could very well be the same. The net cash effect to you could be the same, but now we have to start to look beyond that and focus on some of the qualitative factors of these decisions.
Here's another good question. If you have clients, say, in the startup phase of their business, I guess meaning they're pre-revenue, can you apply for SBA loans? So building upon that, do you have to have a current revenue stream to be eligible?
So everything I've seen is your revenue has to have been adversely impacted by COVID-19. If you're under that 2-year period and still considered a startup, but you are operating and have been impacted, you can apply. If you have not opened your doors and not generated any sales, I would assume an application would not be processed or denied.
Okay. Can both the EMFLEA and the EPSLA apply if the child at home has been diagnosed or treated for COVID-19?
I do believe that there's some clarity that there is no double benefit in regards to this. So if that's the question, if you're asking that can you receive both credits, the answer is no. You can receive one of the two credits. I believe that would put you into the category of the larger credit. But again, you are still limited on that credit per person per day and then per employee.
And then the last question in this section, so we keep moving things along. Just to clarify the process by which SBA loans are forgiven or converted. Is there a process by which SBA loans are forgiven or converted to grants? If yes, what is your understanding of how this is done, or the criteria that would be used to convert to a grant? And then also, if you apply for an SBA loan, what are the typical terms? So if you apply for, say, $500,000, what would be your monthly payment, and when do you have to start to make those payments?
So the first part of the question, the answer is no. These loans are not converted to grants or forgiven. They are treated just like a typical bank loan for existing SBA loans, 504s, 7As. As for the terms of up to $500,000, the SBA has said with the disaster loans that they are determining this payback period on a case-by-case basis. The best term you could receive would be 30 years at 3.75%. You can run an amortization calculator to estimate that payment, but SBA is determining the payback period on a case-by-case basis.
One comment I'd like to make is, we've gotten a boatload of phone calls over the course of the last week, a ton of emails, text messages, a little bit of everything. What everyone needs to remember right now is there is a difference between what is in the law, what is approved, and what is a rumor. What we've had a ton of experience in the public accounting realm dealing with this type of thing, because anytime there's a tax update or anytime there's an update to law, this is the process that we go through to understand it. So there is always a ton of, well, this senator's package or this representative's package says this, or this. What counts is what ends up in the last approved document. So we have to be really cautious to try to separate what's in that final document and what has been proposed and or suggested and or mentioned over the course of the last couple of weeks. So there's a lot of things that are still being talked about in Congress about trying to get approved and trying to get pushed through, like converting these loans to grants or forgiving them or anything like that. None of that at this point has happened until we see a little bit more information in the Senate's version of the relief bill that's supposed to be coming over the course of the next couple of days. I can't necessarily speak to that yet because we don't have the final documentation or bill to read. But everyone needs to be as patient as possible to come back to that same notion right now, is that you have to wait until you have that final document, which has all the rules clearly spelled out, all the regulations, all the things that you need to understand. But there are a lot of mentions of payroll loans and debt forgiveness and all this other stuff. But it's going to be a while before we see some of those things come to fruition, if any of them come to fruition. So that's the caution I heed to everyone. I don't normally read tax bills until they're done. I don't normally read legislation while it's in the process because you can get confused very easily because you were thinking that something was part of the initial plan that didn't end up making it all the way to the final document. So just be careful, be cautious, be patient, and take your time absorbing all the information.
Okay. We will continue on here, and we're logging all these questions. So any question we don't get to live, we will obviously follow up with you individually and directly.
Okay, so in regards to unemployment in the state of Ohio directly related to COVID-19, there's been some changes to the way unemployment would work in a quote normal situation, if we even know what normal is anymore. This is the new normal, so this is what we have to deal with. So the waiting week has been waived. And that also goes for the state of Pennsylvania, which I will get to next. So in a perfect world, if you do have to lay off your employees, they can go to the ODJFS website, apply, and start receiving unemployment benefits right away. As you can imagine, there have been thousands of people applying in the state of Ohio and other states. So in some ways, you have to be patient here too, because the website at certain times is just not working properly. The biggest thing I want to hammer home here is don't keep trying to guess your password. Don't keep trying to log on and force it. Give it a break. Be patient. The last thing you want to do is put in several requests and ultimately slow down the process because you're being impatient. And again, I know how impatient I am, and I like to click that button, but it's important just to be as patient as you can. So if you're an employee listening, or you're an employer that unfortunately had to lay off their employees or will be doing that, there's various links on this slide that you can estimate your benefits. You can see how they calculate it. One of the key things here is there is a mass layoff number, and that will be asked on the application, and I would suggest that any employee that does have to apply uses this number. So another key thing here is it doesn't necessarily calculate based on what your wages are right now. It goes 6 months back. So in the state of Ohio, if an employee intends to apply for unemployment benefits prior to April 4th, it actually takes the average wages from a base period of October 1st, 2018 to September 30th, 2019. And you must have worked 20 weeks within that base period. It doesn't have to be with your current employer. So if you change jobs within that base period, you'll want to have all that information when you go to apply. And as far as we can see right now, the standard $269 per week before taxes does apply. However, there were a couple people that are clients of ours that I spoke with that were going to try it that were just below that threshold. But I haven't seen anything concrete, but I also say it can't hurt to try, but I'm waiting for clarification on that. If you are a client of White Glove Payroll, I can tell you what your SUTA rate is, your state unemployment rate in Ohio, and that also goes for Pennsylvania, and they do not expect that your rate will go up if you have a mass number of employees that take unemployment. Again, this is why you pay into it as an employer, so in situations like this, your employees can go on and get that. So there are some questions that I have in my notes here that I'm going to go over because I expect that people will ask them anyways. So one of them is, how much do you receive on unemployment? It's pretty standard in the state of Ohio. You receive 50% of your pay. Does the employer cover part of those wages? Nope. That's why you pay into SUTA. You have that rate, and it's calculated every year. So, you know, this is just like having insurance. This is unemployment insurance. So something to keep in mind. It's pretty simple. You can go to unemployment.ohio.gov. Like I said, the website is a little bit logged down. But I suggest trying to go in non-busy times, late at night, early in the morning. As silly as it sounds, you need to try to get on the website when there's less traffic. So that goes for the SBA website as well. So there are certain qualifications, whether you can receive unemployment with something related to COVID-19. There are obviously, you know, the non-essential places that have had to shut down because of COVID-19. Yes, you apply as long as you otherwise are eligible. So the facts, that very last bullet point there, that has a stream of questions that I would definitely suggest to go on and look for. Angie, can you go to the next slide, please? So now we're in Pennsylvania. Again, pretty standard. There's a few differences. The waiting week is waived just like Ohio. In Pennsylvania, you have to show proof when you apply for unemployment that you are actively seeking other work. Right now, that's temporarily suspended, so you don't have to show that, because we're all hopeful that your employees return to work when, again, we find our new normal. So the base period is the same, 20 weeks between October 1st, 2018 to September 30th, 2019. There's a few day difference though. That's if they apply by the end of March. So since we're approaching April, if some of your staff or employees apply during April, May, or June, that base period shifts and it's January 1st, 2019 to December 31st, 2019. So I did see a question pop up in the chat that I want to clarify. So Tracy says some employees work multiple jobs, and if laid off from one, could they still be eligible? So that's a really good question, and I haven't had someone ask that. My understanding is in Ohio and Pennsylvania, depending on how much your income decreases, you can be eligible for partial unemployment benefits. So without knowing the specifics of someone that has multiple jobs and how much their income decreased on an average way, I can't say yes or no. But again, my answer there is it can't hurt to try or look at some of those calculations, which are also available in Pennsylvania at these websites on the screen. So again, they're pretty similar in Ohio and Pennsylvania, but I have heard from some people in Pennsylvania, they were told it could take up to 4 weeks to receive their first pay because it is so far behind. So just some things to keep in mind that, again, you have to be patient. And like Tim talked about, really consider if layoff is your best option or if it's something you can potentially try to wait until April 2nd when some of these acts go in. One of the differences in Pennsylvania is that you only have to have an average wage of $116. So it's quite a bit less than Ohio. And again, anyone that has more specific questions, feel free to ask or reach out to us and we can kind of get into the nitty gritty. Go ahead, Angie, to the next slide. So we're going to bump back to Ohio, and Ohio does have what they call shared work Ohio. From what I can understand in this general scenario with COVID-19, it is not necessarily time friendly. In the beginning, an employer must go on and apply for this, and it could take up to 30 days to receive an answer. I did speak with someone at ODJFS on Monday, and they are trying to get through these applications as fast as they can so you can start this right away. But as you can imagine, they are extremely busy, and while it's all hands on deck, they only have so many people that can answer these questions or go through the applications. But something to keep in mind, if you can hold off on a full layoff, if you equally decrease your staff by 10 to 50% of their hours, then you can go ahead and apply for this. And again, this is the difference kind of between Ohio and Pennsylvania based on if you're decreased, if you're not fully laid off, but you're decreased by certain hours. So another thing I was thinking was this is something that could potentially be useful for when we slowly start getting back to our normal, and maybe you can bring back some of your employees, but you can't bring them back at full capacity. So this is something you can think about for hopefully not very far away, but as we figure things out as they come, that's an option. It is not retroactive, so you cannot backdate anything. So if this is something you're considering, I would suggest getting on to apply right away, because if you already laid people off, those people can't be included. So we can go to Q&A on some of the unemployment in Ohio and Pennsylvania, or shared work Ohio. Let me see here.
We've got a question from Wesley. With the uncertainty of how long this is going to last, how do you determine, or how is it determined how much capital you will need? That's conversation we have with our clients all the time. The rule of thumb in any financial guidance, whether it's personal or business, is 2 to 3 months of operating cash flow. From everything that we're seeing at this point, our businesses that have that cushion of 2 to 3 months of operating cash flow are looking like they should be able to weather this storm just fine. Where we're seeing that is the vast majority of businesses and individuals don't have that type of cushion. But if you're asking me what type of cash I would be preparing for, I'm kind of a worst case scenario kind of guy. I'd like to prepare to have that 3 months worth of cash flow, because I would venture to guess that it's going to be at least 3 months before anybody gets back to a normal of their revenue cycle or anything like that. But at least if you've got that 3 months, you can make good, strong, solid decisions about what you're doing to weather the storm over that period of time.
Okay, another question for Ohio unemployment. Is there an approval process to qualify for the alternative base period?
Can he clarify alternative base period? Because the base period is what the base period is. Like, it can't change.
Okay. Adam, please clarify. We will handle that question. And we can keep going. Those are all the questions we have for now.
Sounds good. Okay, so I'll just jump in here and go over our other additional tax credits. And of course, you've probably seen by now that the tax deadline has been extended from our April 15th deadline to July 15th. This isn't just for payments now, it's tax returns as well. So anything will be interest and penalty free for 90 days. And it's up to $1 million for an individual and $10 million for a corporation. You should be able to just file, and then this automatically will apply. Of course, on our end, as we always do, we'll make sure that our system, our software is calculating as it needs to be. But it should, you should not have to worry about any of that, as this is in effect. And then of course, check out the IRS website and with your state if you need any more information on that. It includes the IRAs, so that's also been extended. And then another note is that federal student loan interest has been suspended indefinitely. So there's that as well. But other than that, we've pretty much covered on the business credits that are available per the new Families First Coronavirus Response Act. So unless anybody else has anything to add, of course, here's our contact information for all of us here. Jeff will get us all those questions that you guys have asked, and we will do some research. We'll be sure to get you the answers. If we don't have the answers because they haven't been made clear yet, we'll let you know that as well, either way. So you have our information here, and I guess, I'm going to hand it back on over. Tim, if you have any final comments, or if we have any other questions, Jeff.
And there's one more. Here's another good question. I have an employee who lives in Pennsylvania, but works in PA and Ohio exclusively. So apparently they live in PA, but work in Ohio. Can ShareWork Ohio work for those employees?
So I did reply to Ryan and said I would look into this specifically, but because the business is located out of Pennsylvania, I don't believe they will qualify. But what I want to look in specifically is for the services they provide, because it's in Ohio also, if there's any loopholes for that. So Ryan, I'm going to look into that for you and get back to you after this.
One of the things to look at in regards to that is, and we've got where our business is located, we have plenty of folks that are in Ohio working in PA working in Ohio. It is dependent upon where you're paying the unemployment tax for your employees as to what you'll qualify for. We've had a lot of transportation companies over the years that have to pay unemployment tax in both, and then potentially have the ability to claim unemployment in Pennsylvania or Ohio. So in that situation, it will come back to and be dependent upon where you are paying your unemployment taxes for your employees. We'll let you know, Ryan.
Okay. Then I have a question over here on Facebook. Supporting information, on the supporting information paper section that says compensation from other sources received as a result of the disaster. Provide a brief description. They say they're not clear on how to fill this in. Any insight there? Or is that something we have to follow up with individually?
Sounds like that's on their SBA loan app.
Yeah, that's what I was thinking. We might have to follow up with them, Jeff.
Okay. I'll capture the name and send it over to you guys. Yes, SBA. She just said yes, SBA.
If we can get some contact information, we'll follow up with her on that one. One thing I'd like to add from our standpoint is we've carved off a handful of our employees at H.E. Davis and White Glove Payroll to just stay up with these updates as they're coming. We're trying to continue to prepare newsletters, webinars, any and everything that we can to support both our client base and the community at large. So number one, I want to thank Jeff for allowing us to take the time to put this information out there. As people want to stay up on this stuff, obviously subscribing to the Business Journal's emails as well as our newsletters on our website. We've been trying to pump this stuff out as often as we can, but most importantly, as accurately as we can. It happens quick, and we're trying to get it into an understandable format and get it out to people as fast as possible. So thank you for allowing us to do this, and thank you for everyone's continued patience as we get through this time.
Yes, thank you all. This has been a very productive session. We have lots of questions we've captured from everyone. We'll download all those questions, make sure everyone here on the panel just does final reviews, and we can still do additional submissions through the contact information on the webinar. And yes, as Tim mentioned, the Business Journal is committed to delivering news strategies and resources to our audience of business and community leaders every single day. And now that we are in the midst of this coronavirus crisis and this global pandemic, we've doubled down on our resources. So we are thrilled to partner with organizations like H.C. Davis, White Glove Payroll, and Mahoning Valley Economic Development Corp. as they provide resources. And so that's really our goal, is working together as a community to provide resources and just to get things moving forward and back on track. So with that, unless there are any questions that have come in, I thank everyone for their time and attention today. And this is an ongoing dialogue, and we may find ourselves back in here in another week or two to just update everyone on new information.
Sounds good.
So with that, I thank you all, and thanks everyone for attending, and we will speak to you soon.
Thank you, guys.
Thank you.
Thank you.
Thank you.